Good morning, everyone. First of all, I would like to welcome all of you. Today, we have some really interesting topics to discuss in the blockchain ecosystem. So, let's talk about money first. Money has always been an important part of our life, and the shape of money has changed quite a lot in the last few decades, especially with the emergence of new technology. Now we have access to digital money. And with that, there has been some issues with the stability of money. So, how to counter those issues? We have someone who has extensive experience in the world of blockchain and technology. We have Jeremy Allaire, who is the Chief Executive Officer of Circle, the company behind USDC, and one of the most prominent names in the blockchain ecosystem. So, welcome, Jeremy.
Thank you. Great to be here.
So, Jeremy, let's discuss. I mean, you are a person who has nearly 3 decades of experience in the technology world. You saw the dot-com crash, you saw the financial crisis, but eventually in 2013, you decided to establish a blockchain-focused firm. So my question would be, why did you feel that blockchain is the technology that has the potential to transform the digital money?
Sure. I think just by way of background, in the prior 20 years to founding Circle, I was always interested in how open networks, open source protocols, and distributed and decentralized computing models could change the world. And during the Web 1.0 era, was focused on building technology to enable the use of the web as a communications platform, as a platform for software and data distribution. In the Web 2.0 era, I focused on open infrastructure for how you move video and audio and communications at scale everywhere in the world. And what was clear to me was that there was a missing layer on the internet. And that missing layer was a layer for value exchange. And in 2012, when I became really interested in crypto, as a technologist, what I saw was, and this was really just in the technology of Bitcoin at the time, what I saw was an emerging set of open protocols, similar to the open protocols that we have for how we move data and information and communications freely in the world, that a similar set of protocols would emerge around the storage of value, the exchange of value, and the intermediation of value. There were a lot of ideas in 2013 being put forward about how you could scale these networks, how you could issue other types of assets. So you didn't just have Bitcoin, you could issue something, for example, that referenced a dollar. And that you'd have smart contracts. That was really idea on napkins back then. And so it was very clear that it was going to become possible to build a protocol for dollars on the internet, and that within 5 or 10 years, you would be able to exchange value directly from any person to any person, any machine to any machine, at the speed of the internet, at basically a marginal cost of approaching zero. And then you would also be able to intermediate that with code that was published on the public internet and was tamper resistant and auditable. And those are the basic things that I saw, over 10 years ago and have been pursuing in developing Circle. And I think what's been interesting is it's taken about 10 years, but now we're sitting here today, and effectively we've realized that kind of 1.0 vision that we had of a protocol for dollars on the internet, that essentially with the latest innovations in blockchain tech, you can settle transactions at scale for fractions of a cent to any counterparty in the world, and it's pretty remarkable, and I think, but still quite early stage in terms of where this eventually goes.
And Jeremy, what are the loopholes and issues that the current financial system is facing, and how you think that blockchain technology can address these issues?
Well, I mean, there's obvious things that we know about the traditional financial system. Most of it is siloed. It's siloed within proprietary networks that are out there. It's siloed within countries. There's huge time delays and lags in the way that money moves. So you have trapped capital at an enormous expense to the economy. Intermediation of just moving money there's $1 trillion plus tax on the global economy that comes from that. There's vast amounts of underbanked and huge limits on financial inclusion. And that's not just, kind of having a bank account. It's actually how do people meaningfully participate in the global digital economy. It's very constrained. So all in, you're talking about an industry that accounts for a very large percent of global GDP, that has huge amounts of inefficiencies, that underserves small businesses, underserves many individuals and households. It's all in, several $100 trillion of value kind of floating around. And so with respect to an industry that the internet could disrupt, it's the biggest by far. And so over the next 10 years, I think because this technology is maturing now, and there's, I think, more or less going to be relatively clear regulations in place around how it gets applied, I think the opportunity space to really change things is very significant. One other comment, though, which is I would encourage people not to think about, what happened in the past. We're just going to replicate that, and it'll be better, faster, cheaper. That's not what I think is interesting. When you think about the changes that have happened in communications in the world, and the sharing of information in the world, if we just said, well, we're going to put newspapers on the internet, or we're going to enable you to do a telephone call on the internet, it wouldn't be very inspiring. But what's actually happened on the internet is when you took the marginal cost of moving data or communicating and sharing information to zero, the net world output of communications, million-x'd. The net world output of information that's shared in the world, which has now given us things like generative AI, million-x'd. These extraordinary multiplier effects. And I think with money that can move at effectively zero cost, and with essentially the speed of light and the scale of the internet, money velocity will increase many, many orders of magnitude, which I believe in the end will stimulate a level of economic output in the world that is far, far greater than we currently are realizing today.
And Jeremy, let's talk about adoption. In initial days, we saw retail side took the lead in adoption, but in the recent years, we have seen that many institutions are coming in the blockchain ecosystem as well. So for the next wave of adoption, do you think the next wave of adoption will come from the institutional side or the retail side, or would it be like a mix of both?
Well, it's kind of like the growth of the internet. When the internet really took off in the 2000s, it was everyone. It was mass consumer. It was enterprise. It was all parts of society began to apply themselves and utilize the tools and technologies of the internet. And blockchain tech is really no different. It's a new, very powerful capability for assurance around data, in the integrity of data, assurance around computation and the integrity of computation, and value exchange more broadly. And that touches everyone. So the 5 billion people that are connected to the internet, all of them will benefit. The tens of millions of businesses that are part of the online world are all going to benefit. And of course, every financial institution in the world, because this is going to become, I believe, the backbone of the future internet-based financial system. The internet financial system will include all of those participants.
And Jeremy, when we talk about regions taking a lead in blockchain and digital asset regulations, in your opinion, which regions are taking a lead as of now in providing the right opportunity, right regulatory environment to the digital asset firms?
It's been fascinating to watch, in particular over the last year. There was a lot of attention on, companies that imploded, fraudulent actors, criminal actors. And I think it's great that criminals and others are being held to account. I think it's great that companies that were opaque and running offshore collapsed on themselves in some cases. But what's emerged from that is governments are not overreacting. I think what the smart governments are doing is they're prioritizing this as an industry. They know they need to have smart, effective regulations in place around Web3 as a technology more broadly, and they're doing it. So you're seeing that coming from Japan. You're seeing that come from Singapore. here in the UAE, very much, very active, very proactive. You've seen that with comprehensive rules around crypto assets and stablecoins in the entire EU and the UK. So I think if you look at financial market centers, Hong Kong as well, which is a very strong push around Web3 and digital assets. So if you look at financial market centers, I think you're seeing very steady progress. And I think 2024, if you look at the rollout of these rules, which is going to be overwhelmingly happening during 2024, that is really going to be the year where this goes from an early adopter phenomenon into a mainstream scaling phenomenon. And so I think we go from the hundreds of millions of users that are interacting with this into 2025 and beyond into billions of users interacting with this. And that is in part because of the smart regulation that's coming into place in all of these major jurisdictions around the world.
And you talked about UAE generally. What are your thoughts on Abu Dhabi's digital asset ecosystem?
Well, the ADGM has been actually at the forefront of this space well before many other governments had a constructive framework for licensing, virtual asset service providers. Had a framework for evaluating digital tokens. USDC was in fact one of the very first and is still the only stablecoin that's authorized for ADGM market participants. So I think they've done a very good job. And that's evolved, right? That's now starting to cover other activities, custodial activities, exchange activities. So I think ADGM has been early, and I think now my impression, at least, is that ADGM is moving, is moving forward to really make sure that quality institutional players are operating here, and I think that's the heritage of this island and of this market is quality institutional players. And I think that's attractive. You see many of them at the event here this week are here because of that, I think, constructive, thorough, diligent approach to, I think, productive regulation in the space.
And we have seen in the recent times quite a lot of people talking about the integration of AI in different sectors, be it like asset management, financial services. What's the role of AI in the digital asset and the blockchain ecosystem?
I think it's going to be massive. And I'll talk about two things. The first is AI. One of the most profound challenges with AI is with generative AI in particular is determining truth. And we see hallucinations and also governance models around the utilization of data by AIs. And so what are blockchains really good at? Blockchains are good at providing provenance of data. And so blockchains can become the basis for verifiable data and the utilization of that verifiable data by AIs. So I think the intersection of AIs with the sort of data integrity and cryptographic proofs that blockchains can produce is going to be fundamental. So I think they're almost two sides of the same coin in terms of they need to grow together. The second is that we're going to see a mass explosion in the use of AI agents, AIs that piece together interactions with other AIs and coordinate activities on behalf of firms and individuals. And there are going to be AIs that are interacting all over the world, over the public internet. And AIs are going to need a medium of exchange. They're going to need a way to transact, whether it's at a fraction of a cent for a piece of data or for a more elaborate compensation for an actual service that an AI is procuring on behalf of its ultimate user or beneficiary. And the only viable way to have a uniform, global, open, interoperable, efficient medium of exchange for AIs is stablecoins. And so my expectation is that stablecoins will be the dominant medium of exchange for AIs, and we will see that play out over the next 5 to 10 years as well.
So just closing remarks, what are your thoughts on the digital asset ecosystem as of now, and where is the future?
I think the digital asset ecosystem is going through a pretty significant maturation phase. I think as we go into a phase where a dramatically larger number of households and institutions are participating and using it, we're going to go from the kind of Wild West of a lot of unregulated actors to a world where there's trusted intermediaries that are executing and delivering services. I think you're going to see the infrastructure side of this, which is the underlying blockchain infrastructure, begin to be treated as a fundamental kind of core internet infrastructure by countries around the world, and so you'll probably see evolving rules around that. But that kind of maturation from the early adopter as we cross the chasm into the what's often called the early majority, where this really goes on an exponential growth curve. It is going to be, I think the grown-ups in the room are going to play a larger role, and that will help us, I think, experience this as a more trusted infrastructure that society can depend on.
Well, thank you, Jeremy, for your time, and thank you, everyone, for joining us.